All right. Good evening, ladies and gentlemen. You are welcome once again to Young Investor Network series on financial literacy. The last time we took you through bond valuations, we did future value, present value calculations the previous time. And today we are coming to talk about stock index. What is stock index? How do you create a stock index? And what is the use of stock index? So basically that is what today we will be discussing. Okay, so just sit tight, relax and watch. All right, so I have already calculated everything in here, but we will take our time to go through it, and then we will do it together. All right, so I will take out all that I have done here. Clear content. Okay. And then take out this sector as well. Clear content. Alright. And then I will take out the price weighted divisor, and then the index return to must go. Alright, let me take out the chart as well. Good, so we have a clean sheet. Let me take out these as well. We will not need them. Alright, so to start afresh, what is an index? Or what is a stock index? Basically an index is just a basket of stocks that represent the performance or the general activities of the individual stocks in total. So you take a basket of oranges together, that becomes an index. In this case, as stock or financial literacy like this, we have taken certain categories or certain classes or class of stocks. In my case, I am using the oil and gas companies that are listed on GSC, and basically there are three oil and gas companies that are listed. That is Total, Goil, and then Tullow. So first of all, to be able to prepare the index, like I have said, the index will tell you how the general performance of the stocks are, and then you can also use the individual performance of the stock against, or to measure the individual performance of the stock against the general performance to see whether the stock is performing or doing exceedingly well, or it is not doing well. So let's see, how then do you create an index, or how then do you create a stock index? Basically there are three main ways that you can create a stock index. You can use a price weighted index, you can use a market cap, and then the likes. But today we are going to talk about the price weighted index, where with the price weighted index you deal with just the closing prices, or you deal with the market price of the stock. You find the weight of them, and with the help of your base value and then your divisor, you'll be able to prepare your stock index. So first of all, to be able to do this, I had to extract this data from GSE, that is Ghana Stock Exchange, their website, and these prices starts from the 3rd of January 2017 up to 28th February 2019. So basically we are going to use these stock prices for the three companies that are listed to prepare a price weighted index. So first of all, what we need when we are preparing a price weighted index is their closing prices, like I have already said, and then we need a base index or a base value, and the base value here is subjective. Someone can use 1,000, someone can use 100, someone can use 2,000, depending on how you want to do your own analysis. Then you need the price weighted divisor, and the price weighted divisor here it is just the sum that you have here divided by the price weighted divisor, which will help you to be able to get the trend of your index. So it can be plus or minus the total index value that you have here. So in my case, I am using an index value of 1000. All right, so the next thing that we have to do is to find the sum of the daily closing prices. So we have to find the sum by using the sum function in Excel, and then drag the 3 here. There we have it. So this is the sum of the closing price of the 3 stocks, that is Total, Goil and Tallow, that are listed on GSC on the 3rd of January 2017. These are their closing prices. So you will just have to drag for the subsequent periods. Okay, so we just for the subsequent closing prices. All right, there we have it. So we have a closing price and the sum here. Let's get rid of the error that we see there. Okay, so we select all of them, and then the error here basically meant that we have ignored one adjacent cells, as we can see here, that is the date. So we just ignore error, and then we focus on what we want to do, or what we want. So now we have the sum of the daily stock prices. What we need to do next is to find our price weighted divisor. And the price weighted divisor, like I said, it is simply the sum here divided by our base index. All right, I said our base index is going to be 1000. All right, so this becomes our price weighted divisor. So this will help us to be able to calculate the index of the 3 stocks here, 1, 2, 3, for that particular day or that particular period. So to be able to compute the index for the 3 stocks on the 3rd of January 2017, we just have to divide the closing price here that we have already done by the price weighted divisor. So there we have it. So it's just the vice versa of what we computed, that is dividing the closing price here, as in the sum of the closing price here, by the base index. We got this. We are just doing the same thing. So basically that is how it's going to be, and that is how we are going to do for the subsequent periods. But we won't do them individually. We just have to lock the price weighted divisor, since that is going to serve as our divisor throughout the period. We just have to lock it up with F4 or the dollar function, and then we will drag it throughout. So as you can see, throughout the period, the divisor, or the index, has been changing over time. So day 1 we have 1000, day 2 we have 1000, day 3 we have 1000.67. Started going up, appreciating in that order, and then on the 3rd of February 2017, the index fell to 938.63, and then on the 28th of February 2019, the index fell to 649.10. That is a trend of these 3 oil and gas companies, their index on the market, that is GSC, taking the 2-year period, 2 months to prepare an index. That has been their trend. So yeah, we can't just look at it this way and tell how the index is performing. So what we can do, or what we have to do, is to create a chart. Normally that is what we do. We create a chart. All right, so let me bring the dates here. We create a chart that will help us to be able to quickly tell how the index is performing. So we go to insert. All right, right, then we choose our chart here. All right, let's choose this. Okay, all right, so there we have it. There we have it. This has been the trend of our index over the 2 years and then 2 months. So you can see, just as we saw from the figures, there's a clear translation as we can see here. All right, so let's move the prices to the highest or to the trend that it is going. We go to labels, then use highest or the high prices. So that is it. As we can see, as at 3rd February 2019, the index had fallen to 649.43. That is 27th, and then as at 26 April 2018, it was at 935.62. So you can tell that over the period the index has been falling up and down, up and down, up and down. Yeah, so let's rename it to oil and gas, or yeah, let's make it oil and gas, oil and gas index for 2017 up to 2019. Let's make it 2018 rather. Yeah, so that is it. And then assuming these are monthly prices that has been presented here, because the daily we are talking about 365 times 2, I mean times 2 months, so it's going to be bulky. So they've just capped the periods to monthly closing prices. So as we can see, we have 3rd January 2017, we have 3rd February, 3rd March, in that order. We can also decide to check it out in years. So we come to the base by using the format as is, and then that one will also give us a clear picture of how the stocks are performing. So we come to take these options. Yes, so we go to the base, we choose months. So this has been the trend for months. Then we can also look at years. All right, so this is how the yearly index has also been, but mostly depending on what you really want to look at. If you want it in the long run, you look at it from the 2017 up to the current period. Sometimes you can get it, we call it a year to date, that is a Y2D, year to date index. So instead of me looking at the past or adding the past trends alongside, we can simply look at it from the year to date index aspect. That way we will just take out the 2-year period and look at it from 1st or 2nd January 2019 up to today, which is 28th of February 2019. So basically that is how you prepare your index, and this is how you chart it out. You can add a lot of things to the chart just to make it more appealing and then interactive. That is how you want it. Yeah, now let's look at, I said you can use the index to measure the performance, or you can use the index to compare the performance of the respective or the individual stocks. So to be able to do that, first of all we have to find the average return of the index. So first of all, let's prepare our average return by looking at we take out the current price, we take out the previous, and then we divide by the previous, and then There we have it. So on day one we have 0.00 return. All right, so it goes on and on and on and on and on like that. So on the 28th of February 2019 we had a negative return on the index of minus 0.05 or negative 0.05%. So just like that, we have negative, we have positive. That is how the index works. Because this is price weighted, the index is going to change over time based on the closing prices. And normally under normal circumstance, it is those stocks that are highly priced, or the stocks that have the highest prices, they influence the market. Assuming Total, as at 4th January 2017, was priced at 26.88 Ghana cedis, that is 26 cedis 88 pesos. Goil was priced at 1 cedi 10 pesos. Total was at 2 Ghana cedis. Now looking at the prices here, you can tell Total has the highest prices, and it has been like that. We look at the current stock price as well. So Total, if Total is to move up by just 2 Ghana cedis or 50 pesos, it influences the index more than the prices, the stocks that are not that high as compared to it. So basically that is how the index really works. It is the stocks that are highly priced or that have the highest price, they influence it. The moment they move up by just 1% or 2%, you realize that the index also responds in that manner. So this is the return for the index in general, that is all of them, the 3 stocks here. So what we have to do is to find the average. So the average, using the average function, then we select the first to the last. All right, good. So that's what we have here. So on the average, the index is giving us a negative 0.07% over time. So the 2-month period, the index has given us a negative 0.07%. Now let's take the individual stocks and look at how they have also performed over time. So let's prepare their returns here. Let's make these cells and then refer to them as returns, and then refer the individual stocks here as well, since we are not going to use the first row, all right, the second row, sorry. So now we can just prepare their returns by opening our brackets, taking the current, taking out the previous, closing, divided by the previous. All right, so there we have it. So that has been the trend. So we realize that the prices never changed. It was at 2 Ghana cedis, that is Total, on the 3rd of January 2017. The price remained same for Goil, same for Tallow over the 2-day period. So let's just drag them downwards and look at the trend over time. So let's look at the returns they gave out on the 28th of February 2019. So you can look at the price trend. Tallow was around 26.88 Ghana cedis or 26 cedis 88 pesos on the 3rd of January 2017, and as at 28th of February 2019, it was priced as at 11.94 Ghana cedis. Let's look at the returns they gave out. All right, we've seen some changes here, but that of Tallow, it has remained stagnant. There hasn't been any change because the prices never really changed or never changed. But let's look at that of Goil. That of Goil, as at 28th February 2019. 27th, it was at 2 cedis 93 pesos. Then on the 28th, it fell to 2.92. That is, it lost a peso. So it gave a negative return of 4%. So now let's find the average of these three individual stocks and then compare it to that of the average. So we have total here, so taking the average of total, and then we select returns. All right, let's look at the average, and then we will drag since they are all on the same row. All right, so let's zoom in. Okay, as we can see, over the period, wow, it looks like the two stocks have performed incredibly well. That is Total and Goil. Tallow, on the other hand, not too good, not too good, not too good. And then you can tell, this is a reflection of the price trend from 26.88 to 11.94. You can just tell that, yeah, what we are seeing here is a true reflection of the performance of the stock on the market or on the bears. So we can tell that the index, though, gave a negative return as at 28th February 2019, that is 0.07% minus. Total performed incredibly well. It gave a return, or there's an average return over the period, that is the 2 years plus the 2 months. It gave a positive return of 0.18%. Goil also performed very well, 0.20%. All right, so if you own these stocks, mind you, these are oil and gas stocks, you need to be very careful. They are all from the same sector, so they always advise us, diversify your stocks. You don't have to always concentrate on one particular or in one particular sector, because we can tell that Tallow is giving us a negative return, Goil is giving us a positive return, Total is giving us a positive return here. Now if you want to know the performance over time, you can tell that in general Goil seems to be performing very well. Total, on the other hand, is also doing good, but Tallow, well, that is up to you, up for you to judge. But the index is giving a negative return. So as time goes on, as the prices keep changing, you realize that the index will also be changing alongside. So that is how you prepare a stock price weighted stock index. Let's do this. Assuming on the 1st of March 03, 2019, the stock price of Total goes to 5 Ghana cedis. Let's look at how the index is going to perform. And that of Goil falls to 2.2 Ghana cedis. And that of Tallow goes as high as 11, no, let's make it 12 cedis 50 pesos. Let's see how the index is going to perform. So okay, we have the sum. Since it is automatic, it has calculated it for us, and then you realize that the index, let's look at the change over time. It was at 6.649.1 on the 28th of February 2019. Now the price change within that period has caused the index to increase by or to 650.43, and the change is 0.21%. So let's look at the index, how it is going to perform over time. That is the chart. Okay, it has moved up a bit, just like we saw it downwards or down there. Now let's look at the average. Let's look at the average. So we'll only go down here. Okay, let's select it, then drag down. All right, and then drag it down here. Okay, so you realize that it is still okay. Let's do it again. Yeah, still 0.07 And then let's look at that of Total, the average. Okay, we haven't calculated the individual returns, so we will select the three here. Okay, and then we will drag them down. All right, so that's it. Now let's go and then look at the average return for Total. Or okay, so let's see. Now that we have that of Total, we can easily drag and then good. So as we can see, Tallow, it was negative. It gave a negative return of 18%, 0.18%. Goil has reduced to 0.14%. Tallow has also it did not really change to 0.2%. The index remained constant, did not really make any movements, but I believe there are decimals in there which are going to predict that there was some change along the line. So viewers, this has been the Young Investor Network series on financial literacy, and today your usual presenter Prosper, I have taken you through how to prepare a price weighted index by using some selected stocks that are listed on GSE, that is the Ghana Stock Exchange, and I took 3 oil and gas companies, that is Total, Goil, and Tallow, to prepare the index. All right, so you can go through again, and then if you have any challenges, you can just comment on it or contact me. We will get back to you, and then we will take you through. Please subscribe, comment, like, and then share. All right, thank you very much. This has been Young Investor Network series on financial literacy. Thank you very much.